Hello traders, the title of the video is Area Wave Trader Answers a Question by Felicity Mabudusha. Alright, this is not an incantation, this is the name of a trader that is called Felicity Mabudusha. I hope I'm pronouncing your name correctly. This is a trader that very often will put a constructive comment on our video. Thank you very much. Thank you for watching our video. Thank you for subscribing, and thank you for asking a very important question. So the question was, okay, which indicators, technical indicators, warn about corrective waves? So the question is to know if there are specific technical indicators that can help area wave traders, that can warn area wave traders that a correction is about to begin. It's a very, very important question, and I would like to thank that trader for that. All right. Normally, I should be charging you a lot of money. You tell me in the comment section how much I should charge you for this video, but because I make a commitment not to charge traders for our tutorial about the subject of area wave trading. So this to make you laugh a bit. I say, Joe, you always talk about money. Yes, money is involved in everything, all right? Even in marriages. All right, so Area Wave Trader answers a question by Felicity Mabudusha. I hope you do not mind if you put your name here. So what I will do instead of putting his name in full, I will just put a question asked by Felicity. All right, so I'll remove his surname so that I don't, if in case you are not happy about it, all right, we only use your first name. All right, so as an area wave trader, you'll come across a situation when you want to know, all right, if you like to have a bit of idea where a correction is likely to begin. And most technical traders will prefer to use the technical indicators. But I have a warning, all right? When one starts using, okay, the area wave theory, one is trying to stay away from the technical indicators. Have I heard some trader clapping? Okay, I think so. Because a lot of area wave traders who have been using stochastic, MACD, RSI, all kind of technical indicators, they came to a point where they started feeling that those technical indicators were not reliable. And they finally understand that the price is the number one indicator, and they switch to the subject of area wave principle, which is about the price structure, the language of the price, okay, in order to interpret, okay, the price action. So those traders very often will stay away from a technical indicator, and I can assure you, I notice it all the time, and I know how the area wave traders think, and they try to stay away from a technical indicator. They are no more interested in those subjects. But the reason why I was saying to you, should I charge you for answering this question, is because over the year, because of my obsession to understand things, so I look at something, I do not just look at it, I want to understand it, and I want to understand it more. I come to discover that using moving average crossover can help to determine, okay, even the beginning of the first wave, third wave, fourth wave, and the fifth wave. And I am not prepared to share that information today. I may change my mind in the future. All right? There are specific moving average crossover that one can use that can help. It doesn't mean that anytime that moving average crossover occur, definitely will have a correction. But what I have observed is that very often there is, not all, a specific moving average crossover that usually occur constantly anytime a big correction is about to begin. All right, but I will not share. But don't worry, you may say, oh George, therefore I don't have to watch this video. Stay with us, please, because I will share with you simple, easiest way, all right, to detect whether a correction is about to begin. The first one is to use a channel. So yeah, very simple. So Elliott wave traders are those who do not want to use technical indicator. If there is a trend, very often the trend will be in a rising channel. All right. Sometimes the trend may become stronger. It may go in multiple rising channel or multiple declining channel. So if the correction is going to begin, suppose it is only in one single channel, well, the price will come out of what? The pitchfork tool. So what we do very often, we put a point at the beginning of the first wave, another point at the top of the first wave, and another point at the end of the second wave. And with those 3 points, we put the pitchfork tool, because the pitchfork tool determines the possible path that the price is likely to take. All right. So if the trend remains within the pitchfork tool, all right, well, it's good. So that's the trajectory that the price is likely to take. Sometimes the trend may become very strong, either in a bullish trend or bearish trend, may go above the pitchfork tool. In that case, we use market geometry, projecting the pitchfork tool in the direction of the price, whether in an uptrend or in a downtrend. By the way, if you say to me, George, well, what is pitchfork tool? Go to www.dayprotrader.com and click on Pitchfork Tool Trading. Click on Andrew's Pitchfork Tool. I have 2 pages there. And also, most importantly, check the playlist at dayprotrader.com relating to the topic of Pitchfork Tool. So the Pitchfork Tool, which is the most neglected technical tool or technical indicator, if you allow me, is the number 1 tool one can use to determine whether a correction is likely to begin or not. Very, very important. So in that case, all the area wave traders will be happy because they are trying to stay away from the technical indicator and they rely only on the price action. So the channel, price coming out of the channel. So the market sentiment was bullish. Price was in a rising channel. If it's coming out of the rising channel, it means that the market sentiment is changing, yes or no? But don't take it because the price is coming out of the channel that definitely a correction is going to begin. Let me say this again. It's not because the price is coming out of the channel that definitely a correction is due. Sometimes we may see a partial correction or a little pullback, all right, and then the trend may resume. So price can come out of the rising channel below it, blah, 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 and then go horizontal and do all kind of things, and then go back inside the channel and even go back above it. The same thing can happen in a downtrend when the price goes back above the declining channel, only to go back inside and return back below it, and we will have a continuation. So those are the things you need to pay attention to if you want to detect correctly, all right, that a correction is due, whether it's the first wave or the third wave or the 5th wave. But if you want to pinpoint that a correction is due, you want to identify the 5th wave. So using again, the pitchfork tool, you can put 1 point at the low of the 3rd wave, another point at the high of the 3rd wave, another point on the low of the 4th wave. Now you are concentrating on the next path of the price during the 5th wave. And then if it come out of the pitchfork tool below that pitchfork tool or below that channel, at the end of the 5th wave, the bell will start ringing. But one more warning, because the area wave pattern are fractal, though you may identify a 5th wave on the hourly time frame, it doesn't mean that the whole market is going to start a correction. That correction may be specifically only for that time frame. So now we are referring to higher degree wave count or using different time frame when you want to validate that a correction is due. All right, so it's not sufficient, for instance, to see that the price coming out of the pitchfork tool, or you may see or other indication that a correction is due on a monthly chart. Therefore, one may go, for instance, on Twitter, on Facebook, shouting about correction. All right, so those are the things that you need to concentrate on if you want to, have a warning that a correction wave is underway. All right, so indicator that warn about corrective wave. One of them, the most powerful, is the pitchfork tool. Understand that we use also market geometry. The prime can go above the channel, all right, or may come out of it and return back inside. So you want to use different time frame to validate what's going on. Most importantly, a correction will not take place, all right, if the market remains bullish, because if we are trading first the market, which is the S&P 500, so you want to know what's going on. It's very important because we are talking at the beginning of the year how to become a smarter area weight trader, which we don't want to be technical area weight trader alone. Pay attention to the Federal Reserve policy, pay attention to the current administration policy, especially in the United States, all right? Going to perform Google Assistant, check the fundamental. Don't rely on the technical indicator alone. After you have identified technically that there is a good reason that a correction may begin, do other verification, fundamental analysis, okay, check the policy and so on. So you do not become the only person that is looking for a correction when no correction in fact is going to take place. Maybe it's just a shallow pullback and so on. Okay, all right. That strategy of using pitchfork tool can be will become a little bit not reliable, especially if you want to dictate, okay, the beginning of the correction during the fourth wave. All right, you want to stay away from that, because if the market has been strongly bullish or strongly bearish, don't try to focus the fourth wave correction, because it has been very, very bullish during the third wave. Don't try to focus the fourth wave. Use other method to focus the fourth wave instead of using the pitchfork tool in this case. All right. So we talk about moving averages, specific moving average crossover, which I do not want to share in this stage, all right? We're talking about pitchfork tool, can help us to determine, to warn us about corrective wave, all right? We talk about channels, another method that we can use, okay? So you are talking about technical indicator. Now, as I was explaining to you, a lot of area weight traders are also professional traders. They are more experienced traders, and their number one technical indicator is the RSI, Relative Strength Index indicator. I don't know why, but this is what I found. All right, there are traders that are using stochastic, MACD, and Bollinger Band, and so on, but most area weight traders love the relative strength index indicator. If you want to learn and master the overbought RSI trading, in fact, recently I have recorded a very important video that I posted at Day Pro Traders, okay, YouTube channel. I'm looking for it so I can tell you now. Where am I? Too many videos, George. All right. What is the title of that video again? I'm looking for it. I'll get it in a minute just without wasting too much time. Where am I? Something to do with RSI trading signal, yeah, versus the price action. Have you watched it? Look for RSI trading or price action versus the RSI versus the overbought RSI trading signal at dayprotrader.com. This is an essential tutorial. So now we are talking about the in an uptrend, end of the fifth wave. Most area wave traders will rely on the RSI to help them to determine whether a correction is due. So they know that the market has been bullish, so they are trading first the market. The market itself is due for a correction. They see all kind of orange signal first, which is the warning, and then they start wondering that whether they should start selling, and they go around to analyze many financial instruments. They look at market indicators, all right, crude oil, gold, dollar, yen, all right. They pay attention to the S&P 500. They say it's all showing weaknesses. Now the market may be due for a correction, all right. And then they will rely on the RSI to help them. So in that case, what they are looking for, you have to identify the fifth wave. Doesn't matter. So one more thing I want to say to you is that when you are looking for a corrective wave after the first wave, and Be careful, because if you are using the RSI at the end of the first wave, the RSI will flash a false signal. You may see a false divergence. CCI may exhibit a false bearish divergence after a bullish first wave, or stochastic may exhibit a false divergence, or all kind of indication. So you want to be careful if it's a first wave, and you are using the RSI to determine when the corrective second wave will begin. Why should you care about the second wave? If the trend is going up, at least it's to take profit or secure your gain. That will make sense. But you don't want to trade that second wave after the first signature of the bull, or you don't want to trade that second wave after the first signature of the bear, which is the first bearish wave. Yes or no? So professional area wave traders use the RSI indicator at the end of the fifth wave to help them to determine, that a correction is about to begin. So if you are talking about a correction, all right, try to use the mindset of a pilot. Don't use only one verification. Don't use the pitchfork tool alone. Use multiple verification. Like you can use RSI. So you look at the channel, you use a pitchfork tool, and then you look at everything else. So you do multiple verification at the end of the fifth wave, because you are expecting a correction. So one indicator, RSI, is flashing that a correction is due. You say, all right, acknowledge that, good. All right. And then another indicator, pitchfork is saying to you, correction is due. You say, yeah, I acknowledge that, good. Right? And so on, other indicator flashing, stochastic or CCI flashing, correction. All right, you see some weaknesses, candlestick pattern. Those are another tool that you can use to determine the corrections due. Now, do other verification, check the fundamentals, check the market environment, check the market indicator, check the S&P 500. But be careful, don't be the first person to sell at the end of a bullish trend. Don't be the first person to buy at the end of a bearish trend. Wait for the smart money, because if there will be a correction, they are the one that establish the trend. They will be the first one, giving the bell for the correction. So be very calm, be very patient. You may see the first reaction, there will be a second reaction, and then from there, safely, in a quiet, a nice environment, you will follow the smart money. All right. So apart from the moving averages, apart from the pitchfork tool, traders also use the RSI indicator, and they use the RSI period 14 in conjunction with the fifth wave. But again, when you are using that strategy on one time frame, remember multiple time frame trading, the validation of the area wave count. So you say to me, George, I don't know anything about validation of Elliott wave count. Then I said to you, go to www.24elliottwave.com, click on validation, Elliott wave validations. All right, so we do not use one time frame alone. So for instance, you're the monthly chart, everything is set, you are down, you just say, George, that's it, it's all clean now. It's going to go down. Oh, yes, this is a reversal now. Check the yearly chart, check the quarterly chart. You're on the weekly chart, take the higher time frame, validate the wave count, you see. So a wave count on daily chart is just a piece of the puzzle on a bigger time frame, on a higher time frame. So you want to add them together, all right? So you may know where you are. It may look like a correction on one time frame, but when you put all the puzzle together, you may know that there's a bigger cycle in place. I don't want to be trading against the bigger cycle. I don't want to be part of it, all right? Okay. So this is just to answer a question asked by Felicity, an Elliott wave trader that have asked a question to explain to traders. He say, are there technical indicators that warn about corrective waves? So, all right. So pitchfork tool, moving average crossover, RSI. We can use any momentum oscillator in conjunction with the fifth wave, in conjunction of a higher degree wave count, not one time frame alone. So you want to see the bigger picture in conjunction with the fundamental analysis, the market indicator, all right? the market leaders so we can make excellent decisions. So now here I have the stock of PayPal Holdings Incorporated. All right, so you can see that the price went up, boom, 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 boom. All right, now you can see that the RSI is showing divergence. All right, so anytime you see RSI divergence, all right, think of Elliott wave extension. There can be extension, there can be a divergence, all right, and then you think that it's going to go down, or the price does not go up or down for no reason. It's always headed to a specific target level. So talking about pitchfork 2, talking about channel, talking about RSI, talking about moving average crossovers, all this we want to know if there will be a correction. Usually the correction will start from a target level because the smart money know where at the target level. So use those technical indicators in conjunction with the target level, price target levels. All right. So I don't know whether I should add more to this. All right. So you will see divergences at the end of the fifth wave, stochastic divergence. Stochastic number one indicator for divergences. We can use the volume bar. Okay, so check the video about how to trade the trading volume like God by dayprotrader.com. That is the video that I titled that, or go to www.dayprotrader.com, click on volume stock analysis. So another technical indicator that we can use to warn us about, corrective wave is due is that very often the smart money will buy, you see a surge in trading volume at the beginning of the trend or during the consolidation phase before the breakout forming the first wave or before the breakdown forming the first bearish wave. That volume bar will be there. So here for instance here. So I think there is a video where I posted how to combine Elliott wave analysis or Elliott wave principle with the volume bar. Check it out by 24 Elliott wave YouTube channel. So you have a surge in trading volume, and you may not see any other surge anymore, which means above average trading volume. All right, and then suddenly you may see almost equal size of the volume bar, or you may see another surge in trading volume bar indicating to us that they are coming out now. All right, so the volume bar is another tool that we use to help us to determine that a correction is due. So we can combine the volume bar and the pitchfork tool. Check it out at dayprotrader.com where I'm talking about volume bar and pitchfork tool. Well, we can combine volume bar, pitchfork tool, and RSI without ignoring the fundamental, the market indicator, and everything that I've said so far. So whenever you are thinking of a correction, a warning shouldn't be a one warning. You are looking for multiple warnings. Market leaders flashing a warning, market itself flashing a warning, fundamental good reason. It's not all about technical Elliott wave analysis, but we want to become this year 2018, how to become the video, remember the video, how to become a smarter Elliott wave trader in 2018. So one of the problems that we face is that sometimes we try to go ahead of the market. So we technical Elliott wave traders, we know the patterns, so we forecast the market, which is nothing wrong with that. So we forecast it, we say, well, it's all looking all right, that the correction is true. But then we think of it, say, yeah, they are talking about tax cuts. They're going to cut tax for company in the United States, which means a lot of companies will create more jobs. They will be willing to increase the salary to a lot of people. But the market is flashing and wanting to sell. We will be very careful and cautious until there is, we see that the smart money starts selling. Another technical indicator that we can use, all right, you may disagree that it's not a technical indicator, candlestick patterns, all right, one up, one down, a candlestick bar with a long shadow pierce into a key level, or a long tail pierce to a key level after a downtrend. All right. Candlestick pattern, which is also again the price action. So area where trader will like that. So area where trader can use pitchfork to channel or candlestick pattern, flashing or bearish engulfment, bullish engulfment, or bullish harami, and so on. I'm talking about candlestick pattern at Day Pro Trader YouTube channel. So check those playlists there. So you may have a bit of idea. Another video that I recorded recently is that I'll give you that in a minute. What are we? Technique trader. What are we? A secret, in fact I posted it to them, a secret of mastering the financial market like a genius candlestick trader. Check it out, please. All right. So that can also help traders, all right, to determine whether a reversal or a correction is due. So, all right. So candlestick pattern can also help traders, okay, to determine whether a correction is due. All right. But you have to understand, all right, what is happening now. Okay. So if you see, for instance, that a multi-wave is completed on the daily chart, all right? The daily chart is linked to the monthly chart, and the monthly chart is linked to the yearly chart. So when you are talking about correction on the daily chart, you will be checking the monthly chart. And if you have the yearly chart, check the yearly chart. If you do not have the yearly chart, check the quarterly chart. If you're talking about a reversal on the monthly chart, everything added beautifully, you see now, oh, yeah, it's going to go down. All right. Another thing that you can do is to go, all right, to the yearly chart at least. If you're talking about reversal on the hourly time frame, you will check the daily chart, even the monthly chart. Or you're talking about reversal on the 5-minute time frame, you will check the 2-hour time frame, and you can check also the weekly chart, multiple verification, multiple indication. You can use various technical indicators, RSI, okay, moving average crossover, P42, trading volume, all right, stochastic, CCI, divergences. But remember that corrective wave, warning about corrective wave after the first wave, usually you don't want to get into that. All right. Sometimes also at the end of the third wave, the warning about the corrective phase, which means a trend has been in place for years. All right. And now macroeconomic condition, market environment is telling us that it's topping out. All right. Now we can apply P42, moving average crossover, all right, candlestick pattern, trading volume, channels, all right, divergences of a momentum oscillator to help us to determine the corrective phase. All right. So those are the things that you need to take into consideration if you are looking for technical indicators that can warn about a corrective waves. All right. All right. So another thing that you can do is you can be the most reliable technical indicator that can warn us that a correction is due is the price action. And as I told you, channel are very good. Market geometry will tell us. So if you have multiple channels like this, what usually take place, the price goes from the first channel to the second one, then the third one. Usually you stop on the third one, and then you kind of to retest the top of the first one, and then sometimes you'll see like this, and then you bounce up either to retest the lower part of the top channel or the median line of the top channel, and then from there the smart money ring the bell, pew. All right, then you come out of it, all right, and then again another bounce. So you can be very patient and see if you are looking for a real reversal. There are patterns that are quite easy to determine. So you do not need the moving average, you do not need RSI. Like the flat correction is one distinctive corrective phase. 1, 2, 3. 1, 2, 3. All right, 1, 2, 3, 4, 5. So those ones become easier for us to trade. All right, a zigzag pattern. All right, the WSY wave. All right, those are the corrective wave. The 4 essential corrective wave. The triangles. Okay, and like I said, have I forgotten that? Another tool that we use to determine to give us a warning about corrective wave. There's a please check the playlist about corrective wave trading. There's a playlist when I talk about different scenario to identify the correct way. We use also the ending diagonal. The ending diagonal, if you don't know about it, go to www.24area check, the ending diagonal is a powerful tool that gives us a loudest warning that the correction is due. But in all cases, it's a trading setup will use a different time frame trading method to trade it. I also explained to traders the divergence of the RSI, because the role of the RSI is not about divergence as such, though we can use it for divergence, is to pinpoint bullish and bearish financial instrument. The best technical indicator for divergences is the stochastic. We also talk about, there's a video about how to combine the Elliott wave principle and divergence trading. In fact, there is a web page at 24elliottwaves.com about combining divergences. Elliott wave divergences is something to do with divergence and Elliott wave. Check it out. And that can also help you to determine whether, So the RSI will usually take place, as explained to trader day pro trader. You will exhibit first the divergence, that's the first warning. But the RSI, what you will do, it will now go up again. So the divergence will come first, and then you see another move up, and then before it will come back and follow the price down. So the divergence of the RSI, you need to be careful. When it happens, that's the first warning. Be very patient. Be very patient with the RSI divergence. Same thing with the CCR before, it will, start showing the real direction. One mistake that traders face sometimes, especially on the yearly chart, or on the monthly chart, people will say price go up, we say has been going up for some time. So they will think, because of the Elliott wave extensions, multiple extensions, we talked about that last time. You remember that? Elliott wave analysis, tips and tricks. So because of multiple extensions, you may have all this warning that I told you already, all this indicator flashing to you, and behold, the price is going up again. Extension, extension. You say, what's going on? So by using different time frame trading method, you guard yourself from falling into those traps. When you have a prior warning, clear cut, there is a warning, and then the signal change again. So they flash the orange to you. You say, you can go, and then the signal man stop it and put it in red. Are you going to cross it now? You're not going to cross it. So there will be a prior warning, a valid warning, but then the extension begin. Boom, 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 boom. Especially end of the first wave, end of you call something fifth wave. Remember that the fifth wave can be extended. Call something third wave. Remember that the third wave can be extended. You call something first wave. Remember that it's extended. It can be extended. You call something multi-wave. A multi-wave can be extended. So you may see a trend, in fact, violation of the P4Q or channel, probably beat. You see that's the correction. Yeah, to a certain degree, it's a correction. All right, then again, now that supposed to be a correction on that time frame is only a second wave or fourth wave, and behold, the price continue to go up more, or an extension is taking place. So when you are applying the pitchfork tool or the momentum oscillator such as CCR, RSI, stochastic, or moving average crossover, which I did not mention, I don't want to share it at this point in time. Be very, very gentle and be very composed, because something a correction is due at the end of a cycle. So those who understand the higher degree will come, the higher degree area will come, will help traders to pinpoint whether a correction is due, because you want to refer the mini cycle to the medium size cycle to the higher degree cycle, so daily chart, monthly chart, yearly chart, and you say, wow, it's amazing. Policy made by the government, the Minister of Economy, can change all this warning, and you may see blah 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 price going up. All right, check fundamentally whether, apart from the technical warning, is it still valid to expect a correction. All right, and so on and so on. Sometimes by being patient, so the correction, we know the pattern, like a zigzag. There are three portions. Three sections for the zigzag. You can be patient. So zigzag, wait. All right. Then you take it from the third part down. All right. Okay. Good. But if your question was to know, as an investor, you buy. Now you want to use technical indicator to know whether, you should start closing your trade or taking profit or secure your gain. If that was your intention, Well, I will say to you, the price does not go up or down for no reason. It's going to a target level. Is he at a target level? Secure your gain or grab some profit. Usually, position trader will open multiple positions. So prior hits a midpoint target, they grab some profit. They let the rest of the position continue. You hit the ultimate target, they may take half of the profit or 75% of the profit and leave the rest there. The important thing is to secure your gain. If that was your question, use a price target level. So another indicator that we can use is the price target level in conjunction with the moving averages, okay, RSI. In your wave price structure, in your wave forecast, those things can help us to determine, to warn us about corrective waves. All right? So usually we say, the impulse wave is subdivided into 5. So we say 1, 2, 3, 4, 5. Okay, we expect a correction. Yes or no? So you draw the line. Is he at a resistance level? So the correction also will start. We can use support and resistance level. Very simple, all right? Support and resistance level, price target level, all right? Those are the key levels that we are watching to determine whether you want to sell at a resistance level, sell at a target level, okay? Is the smart man is selling? Okay, we can use the volume bar, the surge in trading volume, as you see, all right? So they will come off, they will interact with the surge, and they will come out, then again you see that they are out. But when they are out, okay, don't rush to call it a reversal with the volume bar. I'm talking about the volume bar. They will, sometimes you will see that for one reason or another, they may close the position very fast. These are precautionary decisions, all right? Because of something else, they want to. I don't want to be around, and sometimes they will come back again, all right? So you will acknowledge the second surge. So you see distinctive surge in trading volume at the beginning of the first wave or during the consolidation before the first wave, and then you see another consolidation somewhere during the fifth wave. And you say, wow, it looks like these people are coming out. You can be very patient and combine the volume bar with a chart pattern, with trading setup. There is a warning, there is a confirmation by the price itself, and then from there you take it one step at a time. All right, I hope I have managed to answer your difficult question. Do you always ask difficult questions? Felicity, all right, you have got me on this one. All right, has been a difficult question. So all in all, one can use channels, one can use pitchfork tool, one can use, all right, moving average crossover, but I did not want to talk about that now. According to trader, we can use the ending diagonal. All right, but whenever we are using any technical indicator to pre-warn us about the corrective wave, all right, we must use different time frames. This is about wave count validation. Don't stop on one time frame and calling it a correction. Add it together, all right? Multiple time frame validation of that warning, validation of area wave count. We can use candlestick patterns, all right? Going out. In the fifth, we see a bearish engulfment at the price target level. Oops, what's going on here? All right, candlestick pattern can help our trading volume, can help our support and resistance level. It will also be very useful to us when we are dealing with a warning. Before we wrap it up, all right, this is a long-form tutorial. My apologies to trader that wanted to be very short. You see, Joe, it's 37 minutes. I will say to you, take a pause, go and eat something, drink something, or go away. Few days later, come back and continue to watch or listen to my beautiful accent. Is it beautiful today? Or does it sound like a frog? Frog. Okay, all right. Is it like a frog? So let's go back. I want to show you this is an essential tutorial, by the way. By the way, it's a very important question. That's why I'm dwelling on it, because myself, I like it very much. So I want to show you very fast one example of when a channel will be very useful to us. And I want to bring on a financial instrument, the Regeneron pharmaceutical. This one stock that I like very much. Okay, am I on the monthly? Yeah, I'm on the monthly. So I see here. So Regeneron, you can see it's a trend in first year. All right. You see my wave count, and now using a trend line, a channel. Sometimes, as I told you, you have multiple channels. This is normal. So I'm going to draw a line to this point that is parallel to this one. So if you are wondering, Joe, what are you doing? Okay, you see that channel, so I draw this point, have the first line, so I choose this point here, draw a line that's parallel. You see that the price breaks above that channel a bit only to form a double top. What's going on? Price breaks above a channel forming a double top. Here it is now, it came out of the channel. So from as it came out of the channel, we are looking for validation. You see here, it tried to retest it here. People were desperate to sell, but look, the small man is very serious about this. Now they bring it back, okay, to the edge of the channel that are drawn on the chart. So now they start selling here. So you see how the channel has been useful here to determine that there will be a bit of change. So warning about corrective wave is about a change of sentiment. So you see here, the channel has been very, very useful to us. Now you may say, John, how about the RSI below? Now we are using the RSI period 14, which is the default setting. The RSI now was really, really overboard. Okay, if it's really, really overboard, it means it's very, very bullish at even at 86 to 90 level. All right. Now you see it top up here was big higher. Now you see it start pulling back. When the RSI is, we talk about this at dayprotrader.com, when the RSI is declining, and we see a bearish channel. When the RSI is declining and we see a bearish trending setup, that is a high probability trending setup. Do you know that? If you do not, it means that you need to subscribe to dayprotrader YouTube channel. Let's say decline point from a bearish channel, bearish chart pattern, double top like this. Normally we prefer a double top to be a little bit wider. The angle between the two tops should be wider. I'm always careful when I see they are very close at this. RSI is declining. I will give it a chance. The double top is valid only if the price found a resistance below the neckline. The neckline is the line here. You see, it went back above it before it came back. The validation of the double top. So those I say RSI declining, yeah. But you see, it went back to retest it. So the price action will help us. So you see, the channel was useful to us to tell us that the sentiment is changing. But the confirmation, well, here it is. If the price, after going up for some time, is going to start showing weaknesses, using the definition of the price action alone, in an uptrend, the price might form higher lows, higher high, until it failed to form a new higher high. But the validation that bearish trend line, that bearish trend that is about to begin, or the correction that is beginning, is becoming strong only if we start seeing lower lows, lower high, isn't it? Lower lows, lower high in a downtrend, higher lows, higher high in an uptrend. So as it start going, I see here, it formed this low here. Now, if it start forming new lower deep in below it down, it's becoming stronger. But here, at this point in time, plus the candlestick pattern on the edge here, we will be now using a different time frame trading method here to trade it in conjunction with the channel. Am I talking too much? Alright, this is a long form video. Sometimes I'm thinking maybe to record a 3-hour video. What can we talk about? If you have a suggestion, put in the comment section. You say this is the subject that you should talk about for 3 hours. I'm thinking to record a video like that, alright? I haven't done one so far. Alright, so here it is. So I want to show you another financial instrument. This is about a channel, alright? Another financial instrument. So we go through them very fast with us. This is Elliott wave party, so to speak. So if you are rushing to go, the party is not finished yet, alright? Stay with me, please. Alright, this is just the starter, alright? Okay, so here again, you see this. I have too many lines here. Price going up. This stock is Stores Incorporated. I'm speaking with American accent. Stores Incorporated, belonging to the consumer sector. Right, is the American enough for you? All right, so here it is. So you can see that the price going up. You see, still in a rising channel. By the way, if I draw. Talking about this advanced trend line, okay, it's rotating. You remember that advanced trend line trading at dayprotrader.com is rotating around this trend line. That trend line. We can use advanced trend line also to help us. So you see, this is trend. So the price blah, 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 blah. But you see, now it's a bow, that trend line. So it's rotating now. You can find a support on the edge. Here you need to be very, very careful. So you see here, now in this scenario, a lot of traders can think, oh, it's a correction. But the price just rotating. It's going up, but it's rotating around a trend line. That's what it's doing here. All right, you see that? Okay. So that's another example. So don't rush to call it a correction. You see here, RSI is now flat. So be careful, because you see here, people think that it's divergent. This is not divergence as such. It's like you are going at a high speed, all right, on a motorway. The limit is 70 miles per hour. Now here you are, you go to 90 miles per hour, which you shouldn't do, all right? All right, now you go to 90 miles per hour, all right? This is about to explain to you what's happening here. And if I became very strong, you went to over a limit, or you saw a police car that went past, you say, oops, but you drop it down to 70. With the price still, your car still going at 70 miles per hour. So this is, it becomes steady now. You pull it to 70. Still going fast, yes or no? The car is not reversing yet. This is why it's happening here. So it went too far. Now it's now stable, but the price is going up. So a lot of people will call this one divergence, but the price denying the divergence. Follow the price. Okay? Another financial instrument that we can use, I want to show you here, is this one here coming up. T-Mobile. Okay? You use mobile phone. Here it is, T-Mobile. So you see here, okay? We can use a pitchfork tool. You call this one as a pitchfork tool. You see like the red one. You see the median line of the pitchfork tool. So if I don't want to put pitchfork tool again on this chart, you can use pitchfork tool in this case. If you want, I can do it very fast. All right. Beginning. And we put one here. And put one at the top here. All right. There are many ways we can draw. So let's change that into pink. I hope you can see on your chart clearly, so you can see my pitchfork tool now. That's the pink pitchfork tool. I have too many lines. I'm going to today, but concentrate a bit more. So it's dropping out a little bit out of the pitchfork tool. But the pitchfork tool is determining the possible path of the trend. Either if the trend is becoming stronger, it will go above it. Let me remove that pink pitchfork tool and now concentrate on the red line. You see here, this red line here. So you see, all right. So we're testing. Okay, this one here. So we can use the pitchfork tool. Those are the exercise we want to do. And again, here nothing can stop you. You see here, if I went down to this place, we're talking about inverted Fibonacci retracement or Fibonacci extension. All right, we can apply that down. You see here. That's what I've done here. You can see the price now 214% Fibonacci reverse of this move down. Normally when we do Fibonacci extension, the extension is in the direction of the price. Here it is inverted, upside down. Okay, here it is, 214% level. Doesn't mean reversal. The warning, anytime you see a triangle, it's a warning. But doesn't mean a reversal. Doesn't mean that a correction will begin. Use the wave count validation, the wave pattern validation. Look at the RSI here. It has stopped again, right here. Now it's coming down, it's resetting itself while the price is in a triangle. Anything is possible. All right? If you break below final resistance, then we will sell. If you break above final support or exhibit a higher low above the triangle, we will buy instead. All right? You see? All right. One more financial instrument. We talk about T-Mobile. I want to talk about another financial instrument, Starbucks. The Starbucks Corporation, here it is. Okay, trend line, channels, pitchfork tool. So if I put, for instance, a gigantic pitchfork tool, because earlier wave traders use the pitchfork tool a lot. We, in conjunction, I'll put it here, in conjunction with the RSI divergences to determine whether a correction is due at the end of the motivation. So here you can see that the price breaks above the pitchfork tool. We will use market geometry to determine the possible reversal point. projecting it in the direction of the price and drawing a line that is parallel to our pitchfork tool. Is it parallel? So what you do, you can just move it here and adjust it correctly, and then one more time somewhere here. Okay, and adjust it something like that. So you project it one more time, here it is, and you always will draw the median line also. So with that, you have a bit of idea. So we have the second channel now. As I told you very often, after the third channel, it starts getting difficult for most stock to go above the third channel. So you may say to me, George, okay, so when it's the third channel, I should sell then. No, all right. No, all right. Okay, all right. So those are the things you need to do, and then from there, the channel trailer you see here, though, you see, it went to the third channel now, so the first channel, pitchfork 2, projection, second channel, third channel, now it's coming back down. Does it mean that we're going to have a correction? Check the S&P 500, pay attention to the market leaders, pay attention to the market indicators, all right? Use the area wave count validation in conjunction with the higher degree wave count to determine whether we should call it, okay, a reversal or a corrective wave. All right. Is there anything more to say? All right. How far did I push it today? Are you upset with me because it's a long form video? Then I will say to you, I said to you at the beginning that this is going to be a long form, yes or no? All right. Okay. So I hope, all right, I have answered this essential question. So talking about technical indicator, Elliott will trade them. Generally do not want to use technical indicator like a stochastic, MACD, RSI. We can use MACD also, all right. We can use RSI, we can use stochastic. We can use even Bollinger Band in conjunction with moving average crossover. You remember, if you go to www.dayprotrader.com, click on trading signal. There is a video about a trading signal where we combine moving averages with a specific Bollinger Band. All right, to determine a reversal point also. All right, and use a volume bar, use a candlestick pattern. All right, use a price target, use the ending diagonal, use channel, use pitchfork tool, use momentum oscillator divergence, but and most importantly, remember that Elliott will trader do care about the price action alone, and they were more likely to use market geometry, pitchfork tool, or a candlestick pattern to determine whether a correction is due or not. All right, George, that's enough for me, okay? So this is it. How long? 51 minutes, right? I can push it to 1 hour, but I'm getting time myself now. So this will conclude our discussion today about Elliott wave trader. Answers a question by Felicity. Felicity is an Elliott wave trader that have asked a specific question: what are the indicators that warn about corrective wave? Was a difficult question, and here is my answer, and I hope I have managed to answer that essential question. If this video has been truly useful to you, you say, George, you nailed it this time for the first time in your life, please let us know by sticking your beautiful thumbs up. Or if you say, George, I'm not impressed, 52 minutes, all about blah, 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 pitchfork through and all this, all right, I'm not impressed, all right, mark it down. That will put us under pressure to improve our next recording. I do pay attention to the ratings, all right, sometimes they mark the video down. If the first person mark it down, if the video is good, you notice that 2 or 3 people will mark it up quickly while they are saying that, shut up, it's an excellent tutorial, it's not bad. And then I know that it's a good job. Sometimes people will mark it down more, and then for maybe a month, and then later on you can people coming up and marking it up. Well, this is improvement. So your rating is very, very important for us, all right? However, if you think that, George, this is an essential tutorial, you are right to say it's an essential tutorial, this can help other Elliott wave traders, all right, feel free to share it on Google+, on Twitter, and also on Facebook. When you are sharing it, just put there, please subscribe to this channel too. All right, that will be helpful to us, and we really appreciate that. If you have not yet subscribed to our channel, well, this is the best moment in your life. Okay, you can be born again today. All right, which means you become a better area trader by subscribing to our channel. Please subscribe to our channel and make sure you click on the notification icon. So anytime I finish to record my video and I click publish, you will be the first person to be notified, so you may learn from our tutorial. Alright, so this is the end of this long form tutorial. So you may say to me, George, it's getting a bit too long. Break it down, please, my friend, and watch it bit by bit with your favorite drink, alright, in your own time, alright. And I will be recording sometimes short form video, sometimes long form video. I'm thinking to record 2-hour video, even a 3-hour video. But I will also be recording 5-minute video, 50-minute video, on average 20-minute video very often, 30-minute video very often. But this one is a long form video, so don't get too upset with me, alright. This is the end of this tutorial about Elliott trader. Answers a question by Felicity. Okay. Indicators that warn about corrective way. Until the next time, enjoy yourself and be very happy. Thank you for watching, and I will speak to you very soon. Happy trading to you all, and enjoy yourself.